Every trader says they want to make money, but what most traders really want is to be right. Right about the direction, right about the timing, right about their analysis. And that desire quietly destroys more accounts than bad strategies ever will. Because being right feels powerful, it feels intelligent, it feels validating. But in trading, being right is often the most expensive addiction. Old school traders learned this early. They realized the market doesn't reward opinions, it rewards risk management. You can be right and still lose money. You can be wrong and still make money. That reality is uncomfortable. So most traders resist it. They argue with price. They hold losers too long. They move stop losses. They double down. Not because the setup changed, but because admitting they were wrong felt worse than losing money. The need to be right turns trading into a debate, and the market never debates, it moves. Jesse Livermore once said that markets are never wrong. Opinions often are, but accepting that requires something rare: humility. Most traders confuse confidence with certainty. Professionals know the difference. Confidence is trusting your process. Certainty is believing the market owes you agreement. And certainty is expensive. That's why professionals don't ask, "Am I right?" They ask, "Is this trade worth the risk?" They don't measure success by accuracy, they measure it by execution. A trader with a 40% win rate can outperform a trader with a 70% win rate if the first controls risk and the second protects ego, because profits come from asymmetry, losses are capped, winners are allowed to grow, but ego hates asymmetry. Ego wants to win often, even if it means winning small and losing big. So traders cling to being right. They fight the market, they fight their rules, they fight reality, and reality always wins. The turning point comes when a trader stops trying to prove something to the market and starts managing exposure to it. When losing becomes information, not an insult. When exits matter more than entries. When discipline matters more than opinions. That's when trading stops being emotional and starts being professional. The market doesn't reward intelligence, it rewards adaptability. And the trader who lets go of the need to be right finally makes room to be profitable.